the AM video edition of Traders Espresso. Did a little bit of a different thing. I sent out the written version of the weekend edition yesterday. I'm doing a video edition, which is going to cover the weekend and the AM edition this morning. Good morning and welcome to the AM video edition of Traders Espresso for Monday, March 5th, 2018. Some of you may be wondering where the written AM Traders Espresso is and or where the video weekend edition is. This video is serving double duty. I did not do a video edition of the weekend Traders Espresso because it seemed kind of redundant. A lot of what I wrote in the weekend edition carries over to this morning, and I'll add a few things that are relevant. But before we talk about the coming week, let's just put some things into perspective as far as what happened last week. Just to recap, there was a lot of economic data that came out last week. It was mixed data. Some of it showed an economy that is growing / heating. Throw overheating in there if you want. Some of it showed an economy that potentially could be slowing down. So some of the numbers were strong, some of the numbers were weak. Last week was a week of contradictions because on Tuesday, everybody came away from Jerome Powell's testimony before the House Financial Services Committee thinking that with a very hawkish, with interpretation that the Fed was becoming much more hawkish on the economy. And it seems to me like after he testified before the Senate Banking Committee on Thursday that he maybe put some of that to rest. Not to say that he came across as dovish, but he did explicitly say that there is no evidence that this is an economy that is overheating, and that was important. Now, that didn't help markets recover on Thursday because Thursday was also the same day that President Trump announced the tariffs, and that's been kind of an up and down roller coaster ride. The reason why the market rallied on Friday was that there was the hope of, or there was some expectation, whether it was reasonable expectations to have or not, but there was still an expectation that perhaps there would be exemptions on the tariff granted to certain trading partners or for certain products or for certain types of aluminum or steel. Over the weekend, the Wall Street Journal reported on Sunday that there would be no exemptions granted. And then I saw just this morning that President Trump came out and said that the tariffs may be unnecessary if we're able to get to a fair NAFTA agreement. So this is kind of a roller coaster ride. I expect more up and down this week. Not that this week is light in economic data, because there is some important data coming out, but most of the data coming out is more important from a geopolitical monetary policy perspective. I would expect then the trading action this week to be driven more by news headlines, updates on the tariff agreement, stuff coming out of the Italian parliamentary elections, which we'll talk about in a second, and then the headline X, which is the headline that we don't know what to expect, but may come out. So there's some PMI numbers coming out, the usual API and EIA. Crude oil stock numbers come out. The ADP employment changes on Wednesday. All of this is detailed in the weekend written edition of Traders Espresso. But there are a lot of central bank decisions. The Reserve Bank of Australia comes out with their interest rate decision at 10:30 Eastern Time tonight. The Bank of Canada interest rate decision is Wednesday at 10 a.m. Eastern Time. The European Central Bank rate decision is 7:45 Eastern Time on Thursday, and at 11 o'clock Eastern Time on Thursday night, the Bank of Japan comes out with their interest rate decision. So, going to be a lot to focus on this week in terms of central bank interest rate decisions. The Japanese central bank seems to be one of the holdouts as far as announcing any sort of easing, or I should say tightening, of monetary policy, bringing an end to quantitative easing. But uh, Governor Kuroda, who's the governor of the Bank of Japan, on Friday, in his testimony before their parliament, the Japanese parliament, did signal that if inflation hits the target, which they think will happen by April 2019, then they would take a look at bringing an end to quantitative easing. Now, the reason why that's important is that he has never explicitly come out and said that in public. The fact that he said it means that he's now got a stake in the ground that people can hold him to. Mario Draghi, who heads up the European Central Bank, has been very coy about when quantitative easing is going to end. He made some comments that were misinterpreted by the markets as an indication that they were looking at ending quantitative easing. He came out at his next press conference and walked those statements back and said, no, that was not my intent. So I think of the major central banks, the European Central Bank is still, I think, is the main holdout as far as explicitly talking in public about bringing an end to quantitative easing. So I would pay close attention to his press conference on Thursday morning and what he says and how the bank or how the markets take it. As far as kind of taking a look at the charts and the technicals for last week, this is where we are right now on the weekly chart. So each one of these bars is a week. And you can see that we were down for the week. This is the Russell. If we look at the SPX, if we look at the Dow, if we look at the NASDAQ 100, you know, it's all pretty much the same. They all look very similar. But one of the things I pointed out, and they're in the written version of the written weekend edition of Traders Espresso, there's a link to an article that I published on Seeking Alpha called Hope is Not an Investing Thesis. And if you read that, it will take you through all of this explicitly that I'm about to do on video. But two things I want to point out to you is the price channel that we're in if we look at a monthly chart. So this, the bottom reference point is the low of 2009. And the upper reference point is this high that was set in April of 2010. And this is the weekly channel. This is the monthly channel. This is the channel in which price action has been contained. I also drew a Fibonacci plot with the most recent bottom here at the beginning of 2016 rather, and then the most recent high on January 20 that was set on January 26th. So that is our Fibonacci. Now, if we look at a daily chart, if we look at a weekly chart, and this is true of all four indices, we can see that there are two main lower reference points. There's the lower bound of the price channel, which is this red line right here, this trend line, and then there's the 38.2 retracement level on the Fibonacci. I would expect the S&P, for example, to trade down to about here. It might take a while, but I think this is the most likely place where we're going to see a bounce. If it happens a little bit early, which is less likely, if it happens a little bit later, which is what I think is more likely, then we might see a bounce up off the trend channel before the 38.2 is hit. But that area highlighted with the gray oval, with the gray circle, that's what I'm targeting. And if you take a look at the histogram, if you take a look at the RSI, all of that indicates what I think is downward momentum. In other words, I think that this is going to continue. There could be some headline, there could be some economic development that reverses that, but in absence of that, that's where momentum is headed right now. Now, the other thing to look at is the ATR, which is the average true range, and it has been true over the last couple weeks or 2 or 3 weeks or so that when ATR is increasing, it is usually accompanied by a downward move in price. So I don't want to say that ATR is equivalent to volatility, but it's been acting as a pseudo proxy for volatility. When price is going up, you usually see average true range come in. So that tells me that bears are more convicted in their direction, than bulls are, because we're not seeing these big ranges in upward price action that we're seeing in downward price action. So that's not to say that the bears are in the driver's seat. I still think there's a struggle. I still think they're fighting it out, but I think the bears have the upper hand right now. So as far as what to expect today, I mean, today is pretty light in terms of economic data. You know, the ISM non-manufacturing PMI comes out in about 15 minutes. That might have an impact on the indices. And then that's pretty much it for the day. So really it's going to be today, at least, is going to be driven by headlines, and maybe even Tuesday as well. So watch your back. Keep Bloomberg or CNBC up. Pay attention to the headlines. Be flexible, be nimble, and have a good day trading. I will see you on the other side in the live stream. Thanks for checking in.